Welcome to The Explainer. Today, we're going to pull back the curtain on the stock market. We're going to turn it from this big, intimidating thing into something you can actually use step by step to build your own wealth. But before we get into all that, I want to start with a really important question. And this is something that affects every single one of us. Seriously, whether you're an investor or not. And the answer to that question, well, it kind of gets to the heart of why just stashing your cash in a savings account might not be the slam dunk strategy you think it is. The big bad guy here has a name, inflation. And it's pretty simple, really. It just means that over time, stuff gets more expensive. So that $100 bill you've got tucked away, a year from now, it's going to buy you a little less. And the year after that, even less. I mean, just think about it. What did a cup of coffee cost 10 years ago compared to what you pay today? Yeah, that's inflation at work. Okay, look, I know this sounds harsh, but it's a quote that really hits home in today's economy. Because if your money isn't growing, if it's just sitting there and it's not growing at least as fast as inflation, then you're literally losing buying power. It's like you're running on a treadmill and slowly falling off the back, even though you're not doing anything wrong. So what do you do about it? How do you fight back? Well, this is where the stock market comes in. If you look back, historically, the market has averaged about a 10% return per year. Now, of course, that's not a guarantee for any single year, but over the long haul, it's been one of the most powerful tools out there for everyday people to beat inflation and actually grow their wealth. All right, so if the stock market is our ride to beat inflation, what are we actually buying? Like, what is it stuff we're putting our money into? Let's break down the most basic building block of it all. You know, a stock sounds really complicated, but at its heart, it's so simple. It's just a tiny, tiny piece of ownership in a company. That's it. So when you buy a share of, I don't know, Apple or Microsoft, you're not just buying some ticker symbol on a screen. No way. You are literally becoming a part owner of that business. You get a little piece of everything, their assets, their future profits, the whole shebang. Here's a super easy way to think about it. Imagine a company is a giant pizza. Well, every single share of stock is just one slice of that pizza. So the more slices you own, yep, the bigger your piece of the whole pie. It's really that simple. Okay, so we get what a stock is, a slice of the pizza. But now the big question, how do you choose which pizza to buy a slice of? For anyone just starting out, this decision usually boils down to two main approaches. So here's where you have to make a choice. On one hand, you could try to pick individual company slices all by yourself. The upside, you have total control. The downside, man, it takes a lot of research to build a good, diverse portfolio. Or you could go with path number 2, buy a pre-made basket of stocks. We're talking things like ETFs or index funds. With just one click, you can own tiny pieces of hundreds of different companies. For most people who are new to this, that basket approach is way, way simpler and a lot less risky to start. All right, so you've decided what you want to buy, whether it's a single stock or a whole basket. Now comes the fun part, actually placing your first order. This is where it all becomes real. And trust me, it's way easier than it sounds. No matter what app or website you're using, it pretty much boils down to these 3 steps. Step 1, pick the stock or the ETF you want. Easy enough. Step 2, decide how much you want to invest. You can either say, I want to buy 5 shares, or you can just say, I want to invest $50. And finally, step 3, you pick your order type. This just tells the market how you want to make the purchase. And that last step, picking the order type, it's actually pretty important. You've got 2 main flavors here. The first is a market order. This is basically you yelling, just get me in, buy it for me right now at whatever the current price is. It's all about speed. The other option is a limit order. This is you saying, hey, I'm only willing to buy this if the price drops to a specific number that I choose. This one is all about control. So want to get in fast? Use a market order. Got a specific price in your head and don't mind waiting? A limit order is your friend. So you did it. You clicked the buy button. Congrats. But what now? This is so important. Your job isn't done. In fact, it's really just getting started. See, the real secret to winning at this isn't just about picking the perfect stock. It's about having the right mindset for the long haul. And believe it or not, the whole system is actually designed to reward you for being patient. Just look at taxes. If you buy a stock, it goes up, and you sell it for a profit in under a year, that's a short-term capital gain, and you're going to get taxed on it at your normal, higher income rate. But what if you hold on to that same exact stock for more than a year before selling? Now it's a long-term capital gain, and the tax rate is usually way, way lower. The message couldn't be clearer. It pays to think long-term. Look, The day-to-day ups and downs of the market, it's mostly just noise. The tried and true path to building real, lasting wealth has always been to buy great assets and just hold on. Let time and the magic of compounding do the heavy lifting for you. Your entire investing journey can start with just one single share. Honestly, the most important step is just taking that first one. So the only question left is, what's it going to be?